When it comes to gold IRAs, a common concern is understanding the penalties and taxes that might come with them. If you're considering opening one, it's crucial to know what to expect, especially since getting this wrong can cost you a lot of money down the line. That's exactly what we'll break down in this video. But don't worry, I'm here to guide you through it step by step so you can make the right decisions for your retirement. Let's start with a quick reminder. If you're thinking about diversifying your wealth into a gold IRA, it's vital to understand the rules around early withdrawals, tax implications, and penalties, whether you're 55 or 75. First, one of the biggest fears for investors is what happens if you withdraw funds early from your gold IRA. The IRS imposes a hefty 10% early withdrawal penalty if you're under 59 and a half. But here's a pro tip. If you're over 55 and still working for the company that holds your 401k, you might qualify for an exception, avoiding that 10% penalty. It's one of the most overlooked opportunities in retirement planning, so it's definitely something worth exploring. But as with anything, make sure you're consulting a trusted advisor who can help you navigate the rules. Now let's talk about taxes. With a gold IRA, you're looking at a tax-deferred growth, which means your investments grow without getting taxed until you take them out. It's a huge benefit for anyone trying to preserve their wealth in a tax-efficient manner. But there's always a but. Once you start taking distributions after 59 and a half, those withdrawals will be taxed at your ordinary income tax rate. This is the same as your 401k or traditional IRA. Here's where things get tricky though. Some people get caught off guard by the tax bill they face when they start withdrawing. Let's say you've done everything right and let the gold IRA grow. You're now ready to start enjoying your wealth in retirement. But remember, those distributions are taxable, which can eat into your returns. However, if you're strategic about your withdrawals, like spreading them out or even converting some of those funds into a Roth Gold IRA, you can significantly lower your tax liability. And that's where the real value of a gold IRA lies. It's not just about avoiding the volatility of the stock market. It's about planning for the long term and ensuring your wealth grows in the most tax-efficient way possible. In fact, gold IRAs often outperform other investment options when it comes to safeguarding against inflation, which we know is a major concern for many retirees. You won't have to worry about stocks falling when you have the stable growth of gold. Now, if you're serious about protecting your wealth and want to dive deeper into the options available to you, click the first link in the description to get a free gold IRA guide. This guide explains why thousands of Americans are turning to gold IRAs to protect their savings, and it's especially valuable for those with at least $100,000 in an IRA or 401k. Don't wait for market volatility to hit. You can start preparing today. Let's address the elephant in the room. What about the penalties for not following the rules? If you don't follow the IRS's rules around required minimum distributions, RMDs, from your gold IRA, you'll face a 50% penalty on the amount you should have withdrawn. This is a brutal penalty, so make sure you keep track of the RMD age, which is 73 as of the latest tax laws. The IRS doesn't mess around when it comes to RMDs, so don't skip them. Lastly, if you're still unsure about whether a gold IRA is right for you, consider this. If you're an American retiree with more than $100,000 in your IRA or 401k, or even if you have 5 Mammy-Plucks in savings, gold IRAs are one of the best ways to hedge against risk and protect your wealth for the future. For more detailed information on how to start your own gold IRA, don't forget to check the link in the description below. It's the perfect first step for anyone looking to preserve their wealth while staying ahead of the IRS penalties and taxes. You've worked hard for your retirement. Now let's protect it.